WEEK44. This is the last week before the US election, and we will see a lot of position squaring, a lack of follow through on a lot of currency pairs before the elections are due. And once I believe it will be on the 4th of November here in London time, once the US elections are over and the result is through, we should be able to see some follow through on major currency pairs leading into the year end. So this week again will be a little bit more limited price action. Having a quick look at the Scotiabank report of the CFTC data, Euro longs have been pairing all this month and last month, and pretty much the month before, so almost since August. This is now nearly the third month where Euro longs have been pairing their positions and squaring them up. That also meant a reduction of the open interest from near 655,000 contracts dropping to 644, and it again feeds into the narrative that there is lack of volatility, lack of movement, as nobody really wants to take any new positions before the election results are due. On the GBP side, we're pretty much flat. Prices are mostly fluctuating on Brexit negotiation. The way it's looking right now is that UK is very likely to negotiate a Brexit deal, which is positive for GBP. But we're unlikely to see the range move towards 134, 136 until probably after an election, and possibly even after the Bank of England meets next month. So a medium-term bias is definitely higher, but in this week we're probably going to see lower levels, possibly 128 again. Positioning is neither stretch on either side, so it would be difficult to try to find liquidity above and below, as there's no positions to shake out. Unlike with Euro, there's a bit more incentive. With AUD and NZD Kiwi, again, both the same. Positions are pretty much flat, open interest very low, and currently there is no immediate need to take a particular position in those currencies. And same thing with the yen, a bit of a reduction in the long side. USD CHF francs have been longs added a little bit, but nothing too dramatic. That would be a game changer. MXN flat as well. We have a quick look at the inflation expectation in the United States and overlaid that with the Canadian dollar index as it follows it very, very sharply. To zoom out a little bit, you can see inflation expectation do not want to climb above 2 so far this year. There might be a possibility that it will climb above that, but the way that yields are working right now and the way the economies are possibly going back into a mini lockdown, possibility for inflation to pick up and punch above 2 is somewhat limited. We're watching that space, but so far these highs being rejected. That also meant that Canadian dollar is possibly going to find another leg lower or just play around in that area. So for the Canadian dollar, it would be somewhere between 75.50 for this week, probably the bottom, and upside to explore 76.50, and on a very bullish tone, possibly 77, oil dependent. Have a quick look at real yields, overlaid that with gold, so real yields inverted with gold. There is not a lot to deprive from here as well. Again, a bit more limited price action because next week we'll be opening up the volatility gates again. Right now we're mostly looking at the choppy range in gold. Real yields again not likely to fall any further from here immediately either. Next week's calendar is somewhat light as well, starting off with Monday, where there's nothing interesting happening. On Tuesday there's durable goods, not a particular mover for any of the currencies right now, as focus is shifting from stimulus talks falling apart. We're likely to see more pressure in the S&P 500. So So we've already seen it dropping this Monday. So hoping to see a little bit more downside going into Tuesday. On Wednesday, we have Australian CPI due. Also have the Bank of Canada rate announcement. I'll show you USD CAD. There's likely going to be a little bit more upside here, and I'm expecting a strong reaction from around this zone, so between 132.40, 132.50 area. See a little bit of a reaction. Specifically, if we've been trading below that area before BOC, this could act as a strong supply zone, and will coincide with the Canadian dollar index at 75.50. We can start thinking about establishing shorts to hold, possibly not before the US election, but at least for a day trade that should give us a clean opportunity to trade into. On Thursday, there's a lot of data coming through, so we got the ECB out. We're not expecting anything new from them. We also have the advanced GDP through. So by Thursday, I'm expecting that S&P 500 has exhausted the downside gears and starts to create a sort of a mini bounce. If not before Thursday, usually around GDP prints, you find that S&P 500 does create a sort of a bullish move in regards of what the numbers are. We have a couple of good earnings coming through on Thursday as well, so it would be a lot of uncertainty around those volatility. Key will be if investors want to hold positions before the elections, which is likely not. So you might see a lot of the moves on Thursday will be reversed going into early Friday, as a lot of position squaring will follow through. From Euro side, we're not expecting a lot. Having a quick look at Euro and GBP, we're here. So GBP USD upside, there's no real potential right now until the election is over. Then we're possibly going to be looking towards 134, 136. This week will be interesting to see if we can touch back into 128 levels, so keeping a bearish bias. Same thing with Euro USD, expecting a dive earlier this week into the 170 area, maybe even a wee tad lower. Again, breakouts are just do not make any sense in this environment, and we're not chasing any of these either. Ideally, we want to fade the wider ranges and see prices revert back to mean. Real quick again, we're looking at a little bit bearishness in indices moving into Thursday. On Wednesday, keeping a close eye on how USD CAD reacts, possibly buy the Canadian dollar against US dollar on a rejection from this level, and expecting a continuous drop in Euro USD and GBP USD earlier in the week. And to wrap up the week, depending on how Thursday fared, we're expecting a lot of position squaring going into Friday, specifically after the London fix, or after 4 p.m. Quick note that in London, British summertime has ended and we're reverting back to GMT. It means you might need to change that on your broker to reflect that for the London fixes to keep you right as well. That's all from me.